For TraderInsight.com, I'm Adrian Manns. Let's continue this new tradition that we have of looking at trades each and every day. I'm going to answer questions about the trades that you had some questions about. And what we're going to do is shift to a different trade today. We're going to look at the Baltimore Chop. So Baltimore Chop is a flagship kind of a trade for us, right? We really use this thing pretty heavily. This has been a cornerstone of the trading business around here for a long time. And you guys know I introduced this idea of a two standard deviation measured move of opening volatility back in 1999. So this thing's really my baby. And I've been trading it ever since. Rick Kipp has been trading this in the first hour trading pit since he went to a boot camp. I think that was 7 years ago. So it's been a good one for everybody who's using it, but it is difficult to wrap your head around sometimes because there's a little bit of discretion in terms of what you're expecting and whether or not you're going to take some of these positions. Biggest discretionary component that I have is whether or not I like a stock. So I've seen most of these stocks trade for so long that I sort of know their personalities, and sometimes you'll hear me say I don't like something just because it happens to be that particular ticker symbol. Today was not that kind of a case. Today we had some setups that were marginal. We've had sort of lackluster setups the entire week. They've performed, they just haven't outperformed. Today was another example of that. But what I'm going to do here is take a look at Conagra and walk you through this trade step by step as it evolved this morning. So what are you looking at here? This is the Baltimore Chop opening gap scanner as you'll find it at TraderInsight.com. So if you're on the course or you have a subscription to this, you should be pulling this up each and every morning. So it's very, very important to have this live on your desktop, because even though we talk about gaps in the first hour trading pit, we don't talk about everything that's going on, right? So all these guys gap first thing in the morning, but we focus on the couple that we think might have the most potential, or the ones that we like. I gravitate towards certain stocks. I move away from other stocks that I just haven't liked trading over the years. Rick is the same way. He's going to move into certain things that appeal to him. Some of us avoid low dollar stocks. Some of us avoid high dollar stocks. So it's really important that you find your sweet spot and that you look at this scanner every morning and find the things that make sense. So if you look at today's scan, this is pretty straightforward. Everything marked with an asterisk, right? So every single spot that you see an asterisk on this, all of these, this means earnings news. So they're popping on earnings. And why is that of interest? Because when you send something out two standard deviations on earnings related news, it's almost a certainty that that's an overblown reaction to what happened in that earnings release. You wouldn't expect the stock to be trading where it is right at that opening bell just based on the earnings news. So this represents the opportunity then for us to have a reversion move back down towards that mean, back down towards the average volatility. Happens many, many times, happens more often than not. We've had sort of some lackluster trades over the last couple of weeks, as I said a moment ago, but that's to be expected this time of the year. Summertime, things slow down, and you see things that develop a little bit less cleanly, and that's okay. But today, we focused our attention squarely on Conagra, because this one was the best looking of the setups that we had. Let's take a look at the chart, and I will walk you through the thinking on this trade. So you see here that right off that opening bell, we have this big gap to the downside, and bar 2, right, this one, and bar 3, these guys represented no interest for me, and that's because the way that these formed, the way that this dropped in here, an entry on bar 3 would have been on a violation of bar 2, and our target would have really only been at that opening tick. So no good. It's got a really wide stop and a really narrow target. Not interested in that trade. Then the next bar forms, and we get sort of the same thing going on. We have a high that's right there, and the next bar is all the way down here. So if you have a move this far down to the downside and you need to track all the way back up into here just to get a trigger, that's not going to make sense as a trade. So when finally that fourth bar formed, this started setting up as a really good looking entry. Let's get the go line here. The trade line was right here. So $26.34 was what we were looking for as an entry. And then where are you going to place that target? We've talked about this so many times. Where do you put a target when you are looking at one of these Baltimore chop entries? So think about the course. Think about the 2 standard deviation course that I gave you, and you're going to get right to the point here and say that we want a 26.85 target. So it's still not one of those big dollar targets like we get a lot of the time, but you know, look, if you can pull 51 cents out of a trade, you're in good shape. And in this case, that's exactly what happened. The stop on this right out of the gate should have been down below the low of the entry bar or below the low of this bar that makes this pointy spot on the chart. And then you can see that the reaction to our target was exactly as expected. As a matter of fact, it did it twice right at that level. So exactly what we thought was going to happen with this one happened. A beautiful 1, 2, 3, 4 pullback on the open, triggers a mean reversion entry, takes us back up into the significant activity of the day. And where's the significant activity, right? It's always around an area like that. Bunch of, you got a close, an open and a close, another open, everything clustered right there. That tells you that's a good place to put a target. That's why we got out where we did. You guys did a great job with it in the room this morning. And, you know, I think everybody's on the same page as far as trading these. Those of you who are new to them and had questions, it's a good thing to ask questions about, because sometimes this one can be a little difficult to wrap your head around. But I think that once you do, you're going to be very happy that you did. So for TraderInsight.com, I'm Adrian Manns. If you have any other questions, shoot me an email. I will be happy to answer. It's the best trader education anywhere, only from TraderInsight.com.